All right, ladies and gentlemen, I hope you had a wonderful day. It has been an absolute wild start to the year, and after today, there is something very big right now in the market that I think a lot of you will regret if you do not pay attention to it now and make a decision. And why I say that is because most of you, unless you just started trading, you have seen what we are going through before, and you have lived through this volatility. And if you want to know what I'm talking about, it is the bond market. Now, I do think the dollar is important. Please do not forget that. But what we have been going through since the end of December with Powell till today, it is creating a very unique situation that the last couple of times this happened, the market saw a huge temporary sell-off, and that's what I want to go over. So a lot of people were going back and forth. Remember, after yesterday, we were up 4% from that lows. Today was a pretty big drop down, and sure enough, you are practically at the same exact price of when we had Jerome Powell. So what I want to show you to kind of highlight the point, we could talk about up and down, and I have a lot to go over on this watch list, but I want to explain to you what it would feel like if we actually went through this again and what you would see if we were going to start getting some major volatility at any point this year, and if this plays out, whether it's soon, immediate, or if it's down the road. So let's go back a little bit in history. We're going to go back here to 2021. Joe Biden became president. I think like Elon, Bitcoin, GameStop, all of that stuff was starting. Everybody was loving the market. Inflation was going crazy. And guess what? You even had rate hikes, believe it or not. But then everybody was like, dude, rate hikes? Like, yo, buy the first rate hike, you know? And everybody was running it up. It's funny because like that Christmas, just like kind of now, we did have like a little bit of a calmer Santa rally, and then you started off the year very, very bad. And why? What happened from 2021 to 2022? Powell kind of started becoming hawkish out of nowhere. You remember Jackson Hole, that was later in 2022, but even at the beginning of the year, they started talking double hikes, triple hikes. And really, Powell started changing his attitude. So you went through all of that. But again, whether you're paying attention to the Fed or not, this is what I want you to pay attention to, the bonds. And now, I don't know if I'm kind of just making this term up. I mean, I've heard people use it, but I just want you to look for a cascading of the bonds. And essentially what happened, 2021, I mean, here's your rate cuts, TLT's high. They start raising rates, and then people start ripping. They're like, nah, they're not going to raise. And then Powell shocks everybody, right? So regardless of what happened with the markets, take a look at what happened to the bonds. The bonds came back to their previous high on the yields. This is that prior low. And then once they broke through it, my brother in Christ, this is where the volatility started to get crazy in 2022. The bonds started cascading. They started raising rates. Things got very, very hawkish. You ultimately set a low, and once we stopped that, that's where you were able to bounce after Jackson Hole. You kind of had your most hated rally. We got into 2023. Rates were still high. That led to a banking crisis, right? And then they kind of added liquidity. It was good. And then towards the end of 2023, what happened? We started getting worried about inflation before we started getting excited about AI. And what started happening once again, as everybody's like, oh, wait, inflation's sticky. Oh, wait, oh, my gosh, the Fed. Oh, is Powell going to be aggressive? And he was. Again, remember the dot plots at those times. And sure enough, the bonds came back to their previous high, or for TLT, the low. And then they broke through and they cascaded, not as much. That brought the market down a lot. And then once that leveled out, we're back to going again. Now, do you see the problem? Yeah, there's a lot of things going on, and we could talk about the exact details, but when it's all said and done, if you go and test this low on the bonds and we flush through, if it's something like 2023, it's not going to be that bad. But if the bonds do a move like this, then in 2022, that's what gave you 10 months of decline. So it's really the difference between 1 month, 2 months of decline versus 10 months of decline. So this is what you got to be looking for. And all I'm saying, do I know that it's going to happen? No. I'm not saying all of this stuff is going to occur. We talked about it a lot today, and I'm saying you're going to regret not paying attention to this now, because if the bonds either blow out or bounce, you're going to look back and this is going to be like, oh my gosh, it's so obvious. So the point is, you want to start thinking about this now, whether you have confirmation or not. If you believe the downside, you can make your plays, start setting up. If you believe that it's going to be a bounce in the 5% and bonds won't materialize, you move from there, or you kind of wait until we get into the milestones of the inauguration, the first 100 days, and then we start seeing more reality rather than expectations in the market. But this is a very big deal, and I hope you realize what I just showed you. This is every volatility moment we have had, 2022, 2023. Remember that 475 to that big drop to 411. It all had this feature with either people worried about inflation or Powell. Bonds start to test the level. Once they break out, remember, they start exploring. I've shared this with you guys over the years, and that would be the worry. And depending on, until we get a handle on the situation, then we'll see where the bonds and dollar and everything ends up. So you should pay attention to this. Do you need to be fearful? Do you need to overreact? Not at all. But like I'm saying, an awareness of this, I think as you start to move through this year and see what happens on this macro front, this will definitely prepare you. So I hope that helps. But that being said, we're going to talk a lot more. I got to really double and triple down because, again, everybody was talking about their crash, up, down, what's going on? And I'm saying, I want you to understand what it would look like. You're going to have bonds and the dollar doing things if that was going to play out. But a lot of people right now, and this is what we're going to talk about, they're forgetting that we just had Powell. So I got the keys, I got the plays, all that good stuff, baby. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
Right off the bat, that took a couple of minutes, but I definitely think it will pay you a dividend. I even got a quantum play for you. So you got to send this to your quantum homies. But before we get into any of that, like I'm saying, please do not forget what Jerome Powell just did. So maybe you're still lost after everything I just went over. Let me give you a more recent context. December 18th, this was our recent Jerome Powell with a summary of economic projections. Remember, the Fed raised their inflation expectations. They introduced that fear and confirmed it more than anybody in the media or anybody else could have. And they lowered the amount of cuts that they are expecting next year. Essentially, what you got at December 18th was Powell put a U-turn on the table in the sense that they were cutting in September, and now all of a sudden they're like, well, maybe inflation goes back up and we might not cut. Why does that mean there would be a U-turn? Let me take you back to 2021, 2022, and 2023. As we were going through this cycle, remember what would happen. As we started to raise rates, the moment we were getting close to pausing, people got excited because if you paused, the next step is going lower and cutting, and vice versa. On the way down, we were saying you're going to keep cutting, and then now they cut a couple of times, but if you're pausing, sadly, the next assumption is, well, wait, are you going to raise rates? But the fact of the matter is, you could chop it up a couple ways, but it's clear Powell is being a little bit or a lot different than he was in September. This is introducing the potential of a U-turn, or now maybe this year we get a hawkish Powell instead of a more dovish Powell like we saw in 2023. And again, hawkish like we did at the beginning of 2022. He wasn't hawkish at the beginning of 2021. It's kind of like he's doing every other year. But the whole point is, this is why we are getting what we are getting now. Even the reaction today to the data, I keep saying this. I took a break. I got a new perspective on a lot of things, and I love the market, you guys, but I'm trying to highlight to you right now, bro, this little news that we've been getting here and there, even the M&A activity and NVIDIA, it does not really matter, and that's not what's affecting us. What you have to understand is that if we did not have Jerome Powell on December 18th, if they did not change the SEP, if the Fed expectations were not that high, essentially if Powell did not put that U-turn on the table alongside the worry of the Fed, I don't think you would be reacting how you are reacting today, whether it was good data or bad data. Remember, we had almost, I think 3 months, a little bit more of no good news, bad news, bad news, good news. You didn't have to play that. It was simple. People were just kind of riding, and then it was more so focused on the election. But the whole point is now, every single set of data, and that's why today kind of sparked things with the JOLTS jobs reports and the ISM. The fact of the matter is, people are comparing this to the backdrop of what Powell just said, and just like the other years. So if Powell is saying, I will be hawkish if this type of data occurs, if the good data means he'll be hawkish and it comes in, that's what's giving us this reaction. But the point is, without what he did on December 18th, you would be in a whole different world right now. And that's what you cannot forget as we start moving forward with all of this. So that's key number one. Key number two, like I told you, the JOLTS jobs data rocketed today. ISM services was on fire. Prices paid rocketed. This is all good data. And remember, we didn't care, good or bad data. We weren't tripping out for literally 111 days. So now, this is what I said today after the data. If the bonds are doing this again and we're getting to this point, you might be at that transition where now, once again, good news may start to be bad news because of what Powell said. And the next time we hear from Powell, if he confirms that hawkishness, you will definitely, in fact, keep seeing this. And then people are going to be like, oh, good data, bonds will sell off, dollar will go up. And then we're going to go through that feedback loop until Powell or the uncle says, Powell or the market says uncle. Shout out to uncle. But why am I saying 100 days? Because think about it. It has literally been 111 days since the first rate cut. After we cut rates, that good news, bad news, good news dynamic, it died because then we chilled and then it was election, but people weren't as worried. They were feeling good, if anything, but now what has happened? And this is actually a crazy fun fact. Ever since we cut rates 111 days ago, the rates are now higher by 110 basis points, and this has never happened ever in history. So we were talking about this on stream today. I thought 1998, but here's the deal. I have a pretty picture to show you. This is the chart. And this is from Apollo, but you could see right here, this is where you are at today, your first Fed cut. And going in now 111 days later, this is the only time you have been higher. Like even then you had 01 in 1998. So the only other time we had something similar was during the tech bubble, but they were higher for a little bit. But then around this moment, they went down. And then 1998, it did run up. And then I think it was about 200 days later, 1998 was up. And then that led into 2001. But the whole point is, right now, historically, first time ever in history where you have cut rates, and now about 110 days later, you are up over 1%. So not only are they remaining up, but even by this margin, this is the largest amount ever that rates have been higher following a rate cut. And then this is for, again, longer and the 10-year plus. And just to highlight the point, if you want to even see just what's happened so far, and I'm relating this to bonds and what you need to look out for, but in a weird way, I'm just trying to show you how, again, this 110 days since we started cutting, it changed the narrative and dynamic. Again, good news, bad news, good news. So it's like if we're going to walk into this volatility again, or if Powell gets hawkish or the data gets good and the rates are still like this is why I'm expecting it. But you could even see here, since we started cutting, the rates have only gone straight up. If you compare it to any average, usually rates are a lot lower or a lot more stable, right? It's not like it has to go. Like this is only 0.2, 0.4. We're talking like, look at this instability, let alone the actual size. And then again, compare it to everywhere else. So very, very wild, but I'm showing you that to understand the good news, bad news dynamic and kind of realize, this is now creating an opportunity where it's very unique of what we are entering into. And that's why it's like we don't know what's going to happen. So that being said, let me finalize it all, man. I'm going to make it simple for you. Just like we talked about, watch for the cascading. Do I think this is going to happen? I don't know. If it happens, I'm going to know what to do. As of now, you'll see where I stand. But when it's all said and done, I'm just giving you the scenarios because it's better to be aware of it now than after it happens. And then there's going to be a whole different set of opportunities. But simply put, if the bonds hit 5%, and then they start looking like they're going to go 5 to like 5.1, 5.2 and do those crazy jumps pointing at 6 or higher, yeah, we're going to get a temporarily major sell-off, something I would say to the tune of 10, 15%. It's not going to last forever. You're not going to get the Great Depression unless we get China deflation. Oh, my gosh. But the whole point is that if the bonds cascade and do what they did in 2022, the higher it goes, the more velocity, the more aggressive, the bigger the bigger the sell-off, the bigger the repricing, right? And same thing, just like 2023, if it hits a new low, hits 5, but then like goes 5.1 and then starts to pull back, you'll get volatility for a couple months or even less, and then it'll start to go from there. So why am I saying this? Because every single time this has happened, 2022, 2023, it didn't happen in 2024. We got worried when it was about to, and it never materialized, and then the markets, they ripped from there. So if that's where we're at now, I'm just going to be watching for it. We'll talk about it a little bit in the plays, but here's the other side of the coin. If, just like 2024, if this doesn't happen, if the bonds don't hit 5, if they don't go 5.5, 6, and you don't get that 2022 cascading, they hit maybe 83 on TLT and then it bounces, then I just think this was a little bit of excitement and anticipation, and then we'll start responding from there. And I'm sure if that happened, inflation and Powell will probably be cooling down. And hopefully you can make that connection there where it's like, again, I watch the bonds, but usually the bonds will reflect what's actually happening. So if the bonds are going to bounce, you're probably going to have less inflation fear or a more accommodative Powell, so on and so forth. So hopefully you're thinking about it like that. But when it's all said and done, I'll talk about one of the plays here. For now, I'm going to wait, and we're going to talk about how you're going to find that confirmation. But that being said, welcome to the beginning of the year, man. I really hope this video helps, man. I think the last TLT video, so share it. I think the last TLT right before everything helped a lot too, but I think this is fascinating. And just like I'm saying, just where the prices are and everything, you're going to want to pay attention to this now. And I hope you'll thank me for it later. But that being said, let us get into the plays. So, right off the bat, let's switch gears a little bit before we get back into this whole bond cascading play. And this is for the quantum bros. Quantum stocks, play number 1. So hear me out, little homie. I gave you guys quantum stocks about 300% lower. Literally, go look at that video that we made. We were talking about Qubit, Rigetti, IonQ. I was even bringing up the ARC ones. I went with the Ghetto QS, and we were just talking about it. Again, that Google quantum, that advancement caused a major move, and it brought about some AI-like hype. So here's the deal, and why I'm saying you should share this with your quantum stock trading friends, because here's the deal. You had an early signal. It went crazy. It's lower from the highs, but it's still very elevated. This is a very dangerous game. You should be able to make some free right now if you positioned early, and if you didn't get the play and you want to double dip, what I would be looking for, find the quantum play that you want and wait till the stock stays at the same price or lower for a couple of weeks here. I'm saying months, but literally give it like 4 weeks, maybe less, maybe a little bit more, 6 to 8. And the whole point is it's either going to be lower or it'll be the same price. All of those options will be much cheaper. And to play it like this, you have to be willing to miss out. That's just the reality of it, because if it doesn't happen and it goes to 50, 40, you're going to get mad, right? But the whole point is if you want to play it safely and be in an advantage position, I would wait for this setup, and then the next major quantum advancement, Google or one of these big companies, that's going to give you the next set of rally with all of these. Till then, I think it's just going to be back and forth until we find an update, because right now it's just all speculation. So it could even get a bid off a small cap rally, but this is how I'm looking for it. So I already made my QS free. That's the only one I have. I'm down to play the other ones, but this is exactly how I am going to go about playing it. So good luck. Be safe. You let me know, but that is play number 1. And then play number 2 now. This is what I'm talking about with this whole entire video. The bonds, the cascading. Do we get volatility or not? Very simple. You either grab puts, you either buy the dip and grab calls, or you hold cash. Very simple. If you think it's going to be 2021, 2022, bonds are going to go 4.75, 5, maybe 5.2, 5.5, and do that crazy 22 TLT cascade, you buy your cheap puts right now. They're cheap. Literally, I showed you that on the chart yesterday. I mean, you just had a huge bounce. I mean, today they're a little bit more expensive, but if that's what you're thinking, you're like, wow, yeah, bonds, inflation, whether you believe the Trump stuff or not. I'm not telling you what to think. I'm telling you, if this is what you think, this is now your opportunity. So if you think that bonds are going to do that, you got cheap puts right now. And if you think the bonds won't break and you're like, nah, it's just a little bit of fear. I think, people are going to, we've seen this before, the V-shape, whatever you believe, and you think the bonds aren't going to break, they might go lower, you wait till TLT gets around 83, test the previous low, it doesn't end up breaking it, and then boom, that's going to be your moment to start buying the dip. And if you don't know yet, and you're like, you know what, I have no idea, I see kind of both sides, we just starting off the year, we haven't even hit any milestones, guess what, homie, this is where I'm at right now. Because I have an idea of it. I want to be aware. I think it would have been a disservice if I did not share all of this with you guys. So I don't know, man. Hopefully you don't hold it against me. And like I'm saying, I really want y'all to pay attention with it, because at this point, I think you have to pay attention, but I want to wait a little bit for confirmation. And if that's the case, you don't know, you hold cash until the confirmation. When we get confirmation, the puts are going to cost a lot more. The calls are going to be a lot more. You are going to pay a higher premium, but I would much rather do that until I have an idea. Or guess what? If you have no idea, but you think it's going to be a major move, out of the money, play the barbell. Spy put, spy call it a day. Ta-da. So hopefully you get how I'm thinking about all of this. I'm not trying to tell you that this is going to happen, we're going to collapse, but I'm telling you there's definitely something you got to pay attention for. And if that materializes, there's clearly a unique opportunity that could lead to either a giant wave down or a smaller one, and then we kind of play 2023, 2024. So either way, it's something you'd want to look out for, and I hope this could help you. I'm going to be waiting a little bit, but then again, confirmation may happen quickly. Who knows? But we'll see what the bonds, dollar, and everything else tell us. Maybe the data, again, you got CPI next week and then non-farms on Friday. But that being said, the final play now, M&A activity. So I might want to make a separate video on this, especially this one's kind of gone on a little long, but simply maybe tell AI to do it. But go through the biggest losers of last year and find the ones that might get bought out, because we started off this year with so many buyouts. It's insane. I think it's because of Trump, deregulation. People are feeling optimistic, but dude, you woke up to like 5 or 6 buyouts or mergers today, and I don't think that's going to slow down over the next couple of years. So there might be some opportunities. Look for names that have done very, very well, down 50, 60% off the highs. They could demand a premium. They're not dying, but they were once doing good, and they're at a good price where they could combine with somebody bigger and still have that value for both the buying company and the shareholders. So like I said, maybe we'll make another video, but I think some of y'all can find some good targets, but that's something I'm going to be watching for. But other than that, as far as the plays that I made today, I made none, big dog. Yeah, I wanted to go for a Google put. If I was wanting, again, if the bonds break, I'm probably going to go with a Google put or a big tech put. But I said, you know what? We're literally at the same price as Powell. I think the data is going to be strong on Friday. So I do kind of have a short-term bearish bias. But at the same time, I'm kind of in a mode of let's take it little by little. I kind of want the milestone more than anything, especially after the volatility that we just saw. I've been pointing you guys here and just looking this back and forth and being right at Powell. So I think even if we go a little lower, there might be some cheaper puts still, but when it's all said and done, I'm going to be waiting until I get a little bit more confirmation, or guess what? Earnings is right around the corner. There's a couple this week, but really after the next 2 weeks, we are going to start getting a little bit more, and maybe our work is cut out for us there. But Chattadonia, that is all I have. I hope you're ready for all of it, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, don't get so caught up in the present that you forget anything of the future, and don't let the future fuel fear that takes you away from the present. Find the balance, dog. So game time, baby. I love you, Chad. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the morning, and horn.